How's it going, guys? Today I'm gonna share with you guys the steps that allow me to determine if a stock is worth buying or not. While investing in stocks can lead to significant rewards over time, we have to acknowledge that it will require time and effort to do the research and also try to see if the company has a great valuation, if the management team does a great job managing their money and the company in general, and also let's not forget if the company has growth potential in the sector. This and much more we'll be talking in this video, so stick around if you want to learn more about these topics. Before we start the video, I would like to announce the launch of my new Patreon page. Besides the fact that you will be supporting the channel, you will have exclusive access to insights on what works for me when it comes to managing my money. From bi-weekly stock buys to an inside look on my main portfolio, you will have access to valuable information that help me navigate this financial landscape. So if by any chance you are really interested in seeing what stocks I buy, when I buy them, and also to see my main portfolio and other tools that I use, please check the link that I put in the description below. And now let's get back to the video. Understanding our investment goals. Firstly, before we even start investing in the stock market, we have to see or at least try to establish our investment goals. This step will be crucial to establishing our main strategy. Are you seeking long-term growth? Are you aiming to capitalize on companies that have strong potential for expansion and value appreciation? Perhaps you're interested in building a steady stream of income, of passive income, and you're more interested in dividend-paying stocks. Or you might choose a more balanced approach, diversifying your portfolio to take advantage of both growth and income opportunities. Whatever we choose, it's really important that we try our best to clarify as much as we can our financial objectives, because they will provide us with a really important roadmap for our investment path. We have to make sure that we align our investment strategy with our goals. Doing this will allow us to make better decisions that suit our unique financial needs and aspirations. Speaking about passive income, dividend income might be the choice for you. If you want to learn more about dividend income and how I invest in dividend paying stocks, you will find a link in the description where you can find one of my videos that I talk about my top 5 reasons why I choose to invest in these types of stocks. Researching different industries and sectors. Understand that each sector will perform differently in relation to the economy is crucial. Therefore, you will have to explore various industries so you can find better investment opportunities. I think we all can agree that the technology sector, especially talking about AI, will transform our future, will revolutionize industries, and will reshape the very fabric of our daily lives. This rapid progress almost offers us endless potential, reflecting a future filled with tons of possibilities and opportunities for growth and innovation. Long story short, Palantir and Nvidia. Palantir, in my personal opinion, still has high growth potential due to the positive results they've been showing in the last period. A big part of that is thanks to the contracts they've been winning, especially those with the US Army. In the latest one, they have secured the $178.4 million agreement with the US Army, where they have to develop and deploy the Tactical Intelligence Targeting Access Node, so-called Titan code. Titan's goal is to provide actionable targeting information for enhanced mission command and long-range precision fire. For Palantir, the biggest takeaway is not only the financial payout of the deal, but also more importantly the proof that its AI platform is starting to win over customers. Also, in the press release announcing this deal, Palantir says that this will be the first AI-defined vehicle for the army. As for Nvidia, right now being the leader in manufacturing AI chips, even at this current valuation, in my personal opinion, I think the stock still has a lot of legroom to grow. The presence of short sellers might affect quickly the stock price in the short term, introducing volatility that might not be suitable for beginners. It's essential to be aware of these risks, especially if we are new to trading options. While this stock might not seem the safest option to save your money in the short term, it holds growth potential over a longer period of time. Before making any investment decision, it's really important that we do our research, we do our homework, and try to understand as much as possible the stock prospects. Investing for the long term could be really rewarding, but caution and well-informed decision making are key and essential for this process. In my opinion, seeking alpha is one of my greatest assets in helping me making better and well-informed decisions. The platform is full of valuable insights and other useful information that can give us a helping hand on choosing what stock is the best choice for us. Right now, they currently offer a 7-day trial, and after that, if you decide to subscribe, if you like the product, you will get a 20% discount on the full year premium membership subscription. So if you want to take your investing into the next level, you should check out Seeking Alpha. Just click the link in the description and see for yourself. Balance sheet analysis. When examining a company's balance sheet for investment purposes, it's important that we do a deep dive into its financial health. Evaluate the management team. The management team of the company is simply the captain of the ship, steering the ship through storms and towards success. Take Palantir for example, led by Alex Karp. Karp and his team have been crucial in guiding the company and bringing it to the current position. With Karp at the helm, Palantir has adapted to changes and also kept growing, which benefits the investors and also the customers. He also emphasized his unconditional support for the people that invested in the company from the very start. Good leadership is not only about experience, it's also being able to make things happen. Karp's management style is all about being clear, responsible and focused on making the company better overall. So thanks to Karp's smart planning and focus on new ideas, Palantir right now is one of the leaders in its field. Assessing the stock price. Another essential point that we have to take in consideration is to evaluate whether the stock is priced correctly. This involves determining whether the stock is undervalued, fairly valued or overvalued compared to its intrinsic value. To make this assessment, typically we have to analyze various financial metrics such as price to earnings ratio, price to book ratio, and also let's not forget about the dividend yield. Price to earnings ratio. The price to earnings ratio is calculated by dividing the stock price by its earnings per share. Let's take a simple example so we can understand how the PE ratio works. Let's say a company stock is trading at around $50 right now, and its EPS, its earnings per share, is $5 right now. To get the PE ratio of the company at this very moment, you'll be dividing 50 by 5, you will get 10. 10 will be the PE at this moment for the company. And just for comparison, the PE of the S&P 500 is usually between 20 and 25. The PE ratio helps the investors assess how much they are paying for each dollar of earnings generated by the company. A higher PE ratio might indicate that the company is overvalued relative to its earnings, while a PE ratio that is lower might suggest that the company is undervalued. Investors often compare the PE ratio of the company to its peers and historical averages so they can have a better idea of the valuation of the company. Price to book ratio. The PB ratio is calculated by dividing the current market price of a stock divided by the book value per share. Again, a simple example. If a company's stock is trading at around $30 and its book value per share is $20, to get the PB ratio, the PB ratio, price to book ratio, you will be dividing 30 by 20 and you will get 1.5. So if you want to see if the stock is overvalued or undervalued according to the PB ratio, you will have to see if the PB ratio of the company is greater than 1, that means the company might be overvalued, and if it's lesser than 1, that means the company might be undervalued. The PE ratio and the PB ratio are valuable tools for the investors to assess the valuation of a company relative to its earnings and also its book value. Using these ratios and other financial metrics, we can assess if the company is correctly priced. For instance, a low PE ratio or a PB ratio compared to the industry peers or historical averages might indicate that the company is a good opportunity to buy and it's undervalued right now. Conversely, a high PE ratio or a PB ratio might indicate that the company is not such a good investment right now and it is overvalued. Evaluating growth potential. Besides looking at the stock price right now, we have to pay attention also if the company has growth potential. If we're lucky and also we do our research, we can find good investment opportunities in companies that have huge growth potential for the long run and we can make a lot of profit. Here are some simple but important points to keep in mind while assessing if a company has growth potential. Firstly, we have to see if the industry is doing well. Secondly, we have to see how well the company competes against its industry peers. And lastly, let's not forget what new ideas the company has. Tesla serves as a prime example of a company with growth potential, given its focus on disruptive technologies such as electronic vehicles, renewable energy, and also self-driving. So we have to pay attention to the stock price but also to the growth potential of the company. In this way, we're going to allocate our capital more efficiently and we will maximize our returns. To sum up in a few words, choosing the best stocks is really tricky. We have to do our research, we have to be patient, and also we have to learn from our mistakes. I've encountered my own share of setbacks along the way, and hopefully by sharing these lessons that I made in the past, you will navigate the stock market more efficiently. It's important to recognize that investing carries its own risks. We have to take our time to understand our options and also seek guidance if needed. So in the end, success in investing, in my personal opinion, I think comes from a combination of knowledge, discipline, and also, let's not forget, a willingness to adapt. So if we stay informed, if we try our best to avoid common mistakes, and also seek financial guidance if needed, for sure these three things will increase the chances of us reaching our financial goals and building a secure future. Thank you guys for watching. If you have any questions or comments, feel free to leave them in the comment section below. And also, if the video helped you in any shape or form, please give it a like, or why not subscribe to the channel to see what's coming next, and I'll see you in the next video.